Right now, the market's kind of taking a break. There is no big catalyst right now that is making the market move in any pointed direction. So I see profit taking place on the side from the institutions, mutual funds, hedge funds. They may be taking some profits at this particular point. Remember, the market has had a huge run up in a very short period of time without any rest. The last time we saw a big rest was last year. So here we are towards the end of March that it hasn't had any significant pullback. And until we get some more news, like what we saw today with the unemployment numbers, which were good, by the way, but still not affecting the market as a whole. Like you said, the market just doesn't want to hear it right now. It's like they took a seat at a rest area and they're waiting for the next car to come along to chug it along. I was at a retail mall the other day, and I saw lines out the door for Nikes, right? The sneaker. People are buying up sneakers left and right. I mean, they were leaving with 8, 9 boxes of sneakers, So I don't see this going into the market just yet. However, what I do see, there is a lot of people who are making purchases and thereby stimulating the economy, which was kind of the purpose of putting that stimulus out there per se, but it may curtail any future stimulus if that continues to happen. We have good news and the catalyst for growth continue in this country. That's another thing that we're going to see down the line, but not just yet. I still see people, they're hoarding onto cash for a little bit, but they're spending, the smart money is they're spending anywhere between 40 to 50% of that check, if not more. There's always a buying opportunity there. The thing you have to ask yourself, if I'm investing for 20 years, do I really care about what's going on right now? I'm going to invest like any prudent investor, try not to get in at the high. But if you have 20 years, what does it really matter? So you say to yourself, I want high quality names. I want companies with big capitalizations. And I want companies that are going to take advantage of what's going on right now. And that's not that hard to find. But the thing is, you have to really stick to your guns, especially if you know it's going to be quite some time for your investments to grow and mature. But it is something that's going to happen because time on your side gives you a lot more luck and a lot more skill and a lot more money long term. The Fed is doing their purchases right now of assets in the markets. Their target is to keep inflation or not do anything about it until inflation reaches about 2%. We're really not anywhere near that at this particular point. However, that could change. And the thing to keep in mind with inflation is that things start getting more expensive. But it is a boon to financial services companies who have not made that much money in this particular rallies that have occurred. So we could start seeing those cyclical start to move. It's also another thing where if you're at 2%, that's when the Fed is going to say, okay, maybe we need to start raising interest rates, and they'll start raising the interest rates from there. And that's when prices of homes, anything you're financing, those prices start going up bit by bit. But it's not something that happens overnight. I mean, we could see that far out. I don't see that happening till 2022 and probably second or third quarter of 2022. And the reason being is that the Fed is still aggressively buying assets and trying to keep inflation at bay. If the situation changes, of course, the Fed will be forced to act sooner and respond quicker to those market conditions.